Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Well, today the stock market had a good day, which is so fun and interesting because I feel like every time I get up here and have one of those calm, relaxed type of moments when it comes to the stock market, the next day or two, the market has a pretty good day. You can go back and check the tapes, like especially in 2022, you can go all the way back to 2020. Almost every time that we have a significant dip in the market, a good day is right around the corner. And we just so happen to have it back to back today. So in today's video, I need to explain what happened, why the market was up, and what you need to really pay attention to as an investor. Because yesterday, a lot of that advice still stays here. That actually doesn't change anything. So let's go ahead and jump into it. So the Dow Jones, that is the main index here, is only comprised of 30 companies in the U.S. It was up 500 points. The S&P 500, which is a better metric, it's the largest 500 companies, that one is up almost 2% today, which is quite significant. Eli Lilly, a company that stock symbol is LLY, a company we have talked about in healthcare, that company by itself was up 7% in a single day today. That is significant. Now the company is up quite well all year. And I actually put whatever the number is for the past year for Eli Lilly, but they've done well. In any given year, when we say the average stock market return, we usually use 7%, and that's just like the basic number. It did that in a day. So again, that is quite significant. So how do we get here and what you need to know? We got here because the Bank of England said, hey, we're going to pump the brakes just a little bit. We don't want to put you into a recession. And the stock market said, great, thank you. And it took off. That's essentially what they did. But basically, the Bank of England, which is their version of our Federal Reserve, said they're going to temporarily buy British bonds. Anytime you buy something, you are putting money in the hands of somebody. That money is going to go out and grow the economy. If you buy something from me, you're going to exchange that for cash. I'm going to take that cash and go buy tacos, right? And that's going to help a business out there, particularly a food truck up the street. But that's basically, the boiled down version of how it works. Now remember, the Federal Reserve here in the US and other central banks were raising rates, and they were not buying bonds to get everybody get the economy back to where it should be and cut down on inflation, because we have pumped too much money out. They bought too much bonds. They're cutting back, raising interest rates, and trying to slow things down just a bit. And that has been a concern. We have talked about this before, and this fear has been out there where you raise interest rates too much and you push the economy into a recession. So England is saying, look, we don't want to do that. We're going to buy a little bit of bonds just for a little bit and just, see how things work. And that is why the stock market was excited. That is one reason why the stock market was up today. Now, what does this mean for you as an investor? Not a lot. Okay, not a lot. This is not going to change my behavior. I'm going to continue to hold the things that I was already holding, and I'm going to continue to buy whatever it is I'm going to buy come this Friday, like I always do. And here is why. And I've said this before. When you take your money out and you panic and you just miss 10 of the best days in the stock market every single year, your average return drops significantly. So I'll actually put this on the screen now, where you'll see that from 2002 to 2022, and this is, I think, from early January, we're looking at 20 years. If you stay invested the entire time, your average return would have been about 9.4%. That drops the minute that you say, look, I'm pulling it out, and you miss the 10 best days, that drops to 5.21%. Now, you're looking at this, I'm looking at this, we're looking at percentages, and it didn't really tell you all that much. So what I did was actually do the math. So if you took $10,000 and let it go, and you got about 9.4% every single year, which is, again, that was the average, the real average during that time. But if you did that, you'd have about $60,000 today. Okay, you put in 10, you got 6x out at that 9.4% number. Well, what happens if you do that 5.2% number? You put that in and you have about $27,000. 60,000 to 27. That's if you're rounding it up, that's about a $30,000 difference between the two. Okay, so that difference between 9 and 5% is quite significant, and that was just over the last 20 years. Imagine if you were continuing to add into that, and those numbers really start to spread out, and it starts to get the gap starts to widen even more. So that percentage does matter. And remember, that's just 10 days, 10 of the best days, and you never know when those days are going to happen. If we took a poll yesterday and said, hey, it's one of the worst days we've seen in a while, the market's been down 6 days in a row, do you think the market's going to be positive today? Do you think a company like Eli Lilly is going to be up 7% today? Yes or no? Most of us, myself included, said, nah, that's probably not going to happen, and it did. Okay, I don't know what's going to happen tomorrow or the day after that, which is why you should stay invested. That's the entire point. That's the argument here. Continue to stay invested and stick with your strategy, whatever that strategy may be. Hopefully, is a strategy that maybe we talk about inside the members only. More importantly, it should be a strategy that has proven to work. Hopefully, it may include index funds, but definitely include companies that are proven to be solid and have a reason to do well in this type of economy. I didn't check how Upstart and some of the companies we had talked about yesterday did. I don't know if they did well or not, but the point here is you do want to stay invested, especially for the long term. If you bought yesterday, which is what some people did, if you bought on Friday when the market was still down, these are those discount opportunities. They don't always happen overnight, nor do I expect them to, but this is why you do that. When we talk about dollar cost averaging, when we talk about, buying into companies that may feel like they're at a discount, these are those opportunities where they start to pay off. Another example here, and I talked about Starbucks, I think it was 2 days ago. I bought Starbucks at Starbucks this morning for $83.83. For whatever reason, it was just $83.83, and that's when I got into it. And it shot up to about, I think it was $87 or so. I think I got out at about $85. Took my little profit. That's what I needed. I hit my goal, and I was out. And that was it. Right? I understood, based on what we talked about inside buying, based on some of the techniques that we talk about inside the members only, use the chart and determine this is the price. If it felt like a discount, that's what I want to buy, and it popped today like most stocks did, and I was able to get out. So you have to use those techniques, right? Whether it's a short-term technique, which is what I use, or a long-term technique, which we talk about on the channel all the time, you have to be able to understand what is a discount and what is not. But most importantly, you got to understand to stay in the game. Again, I don't know what's going to happen tomorrow, okay? I'm not going to be shocked either way, whether it's a really good day or a bad day or just a meh. We'll see. But the point here is staying invested does pay off more often than not. Okay? All right. So we'll see what happens tomorrow. If you have any questions or companies or things you want me to cover, let me know in the comments below. It actually makes my job a lot easier. I do have a few things I do want to cover, but this one, it was just too good. It surprised us all today. So I wanted to make sure that we cover it and discuss it. And again, you're in the right spot. So make sure that you like, subscribe, and make sure you check out the members only. All right. That's it for me. I'll talk to you later. Bye.